So this might rub some people the wrong way, but I'm going to say it. Buying IPOs on the day they come out is stupid. And I say that because I want people to be better investors, genuinely. I want people's accounts to grow. But this is not the way to do it. If you buy an IPO on the day it comes out, you are part of a long human centipede chain of early investors. And their job is not to make you wealthy with this generous offering to you. They don't want to go public and be accountable to shareholders with quarterly reports just so that you can get rich off of it. No, they took on the early risk as angel investors and VCs, and they are part of their business model now cashing out of their early investments. And there's a reason they strategically do it at market highs. Is to capitalize on the euphoria of the public. This is all designed in the way to get the highest price possible. Now, I've heard speculation that Airbnb is going to be $350 by Christmas. I think that's just absurd. A company that's made $4 billion last year is then going to be worth $250 billion in 2 weeks. Maybe, I don't know. No. You can play IPOs, but not on the first day. You can be patient. Otherwise, just donate your money to charity. Just donate about a quarter to a half of it to charity and then invest a month later, something like that. And if you want to know what I'm talking about, just look at some other IPOs. That's one thing I was challenged when I was presenting this was, oh, well, this is different. This stock is different. Well, let's look at a few. What are some that are similar? Well, what about Uber? Well, Uber is another tech company, crowdfunded, et cetera, et cetera. Well, it IPO'd last year, and here's what the first couple of months looked like. From May of 2019 to here, investors took about almost a 40% haircut. Now, of course, it's up now, but there was ample opportunity somewhere in here for you to get in and benefit from Uber or your bullish case on them. What about Lyft? Ooh, well, it's not quite so good, is it? No, that's not quite a very good case. We could also go way back into many years BC before Corona. What about Facebook? Have you ever heard of a company called Facebook, FB? What did it do? In its first few months, back on 2012, it came off of its IPO price of about 42 down to 18. That's over half the value that investors lost. Now, Facebook is much higher today, but in those first couple of months, it sure was not. But there was plenty of opportunity in here to capture some gains from it. I mean, you could have been patient, waited a couple of months, waited for a little bit of a impulse, go from here to here. There, now we've got maybe some halfway points activity or something even simpler. Just wait for it to break the IPO high. And what happened then? We got above it, pulled back to that price, and the rest is history. Up and up it went. So there's plenty of ways to play IPOs successfully. But on the day of, that's not it. If you're doing this, you're just rampantly speculating, you're gambling. There will be opportunity in the future. Don't be so short term about it. So invest wisely. See you in the next video.